We've been to San Francisco. Were you with me in San Francisco with the car?
And the car broken into.
Yeah.
Yeah.
Yeah, that's fucked. That's been happening all the time. What happened in San Francisco is that the DA, so when the police arrest somebody, the DA has to press charges.
Right.
And the DA, there's a guy named Chesa Boudin who had a philosophical approach, which was to not press charges for many crimes, particularly property crimes. And so sort of the criminal element knew that even if they're put in jail, they'd be released the next day. And there are these stories from the police of arresting the same person 16 times. And the DA would just say, no, let him go. That DA, so I think sometimes in America, shit has to hit rock bottom before everyone is finally like, okay, we agree. Let's do something about it. There has to be like some indisputable state of chaos or tragedy. And it got so bad that finally the public recalled Chesa and replaced him with someone who was pressing charges on everything. So that dimension has flipped.
Okay.
And the police force has been understaffed, and the police commission has really made it terrible to be a police officer there. Anyways, there's a lot of work underway to now. There's enough of a coalition to solve this. The other thing is that the tech community historically in Silicon Valley has an ethos of we want to build the future. We want to innovate, and doesn't view themselves as part of the system or the establishment. And as a byproduct of that, has not really engaged with government. And that extends to city government. And so even though San Francisco and the Bay Area are filled with really competent, really thoughtful, influential people in tech, for a long time, they just didn't get involved. And they lamented that it was getting worse, but didn't get involved. And that has started to change as well. In particular, there's an individual named Gary Tan, who...
Why do I know him?
Gary was an early investor in Coinbase.
Yes.
Ran a very successful venture capital firm called Initialized Capital. And he recently left to become the president of Y Combinator. If you're familiar with Y Combinator, famous. And Gary, I think finally, he's a San Francisco native. He lives in San Francisco, said, you know what? I'm going to get involved. And even if I take tons of flack for being a tech person, tech people are not popular these days. This needs to get better. And that has been a really, really fantastic thing as well. So he's activated a lot of thoughtful people who previously were not weighing in on local elections that have these ramifications. So
good.
Anyways, I think that the trajectory hit rock bottom, and it's on an improving trajectory. The other thing about San Francisco is that everyone tweets when they leave San Francisco, and nobody tweets when they come back. But people have been moving back.
Oh, okay.
So I'm optimistic about the what's to come for this.
Well, I love it as a city. Mm-hmm. It's my football team.
Mm-hmm.
I picked the 49ers when I first watched it.
Oh, right on. I love that.
Well, so when I first watched it, it was first game I ever watched of American football. It was Jerry Rice was wide receiver, and it was
Joe Montana, Steve Young?
No, it's Steve Young.
Yeah.
And I was like, and they won. I was like, okay, that'll be my team.
Right on.
No other reason. I did see them play in London. We get the London games.
Oh, interesting.
Yeah. So we get 6 NFL games a year in London.
Yeah.
And I saw them play when Kaepernick was QB and he was running all the time. But the city's great. I mean, it was great. It's just every time we would go back, once or twice a year, it just got worse and worse. And then to the last time, it was just like, oh, this is ridiculous. Like we parked right outside a restaurant in a clear lit area.
Nice part of the city.
Yeah. Came out.
Yeah.
Rental was smashed. And I was like, oh, great. And then just there was always a homeless problem when I was there. But like this was obscene. This was dystopian. It was what's that area? The
Soma Financial District.
Tenderloin.
All right,
but you used to have the Tenderloin, but it would spread so far out now.
Yes.
And I was just like, oh, come on, fix this city. San Francisco's amazing. Fix this city.
Yeah. The other thing I'll say is that San Francisco is a city of many districts.
Yeah.
And most people who are in for business or for tourism, they experience a very, very narrow part of San Francisco, which is Soma and the Financial District.
Yeah.
It's kind of like commenting on Manhattan based on your experience in Times Square and saying, I was in Times Square, there's too many people. There's all these people in costumes. Manhattan is filled with people in costumes. Times Square is a unique, and there are other parts of Manhattan that are different. In San Francisco also, most people who live in San Francisco live in one of the other districts that are very different. Yeah. But those are the two business districts, Soma and the financial district. And so that's the most well-known part of the city, which has really been plagued with those problems.
I'm looking forward to coming back because it's been a while since we've been, haven't we?
That would have been, I think, 2021.
Yeah, last time we were there. It's been
give it another shot.
Yeah, no, I mean, I love the city. I took my kids there, took them up to the Colt Tower. Obviously, we went down. Was it Pier 49 or 52, which is the pier? I can't remember. I told you we went across the Golden Gate. We did everything, and we loved it. I love it. So and I would love to see it again. So look, we'll be back anyway. Welcome to the show, Hunter.
Thank you. I'm so excited to be.
Is this your craziest week ever?
This is a crazy week. I always feel like Bitcoin in the space sets new records on what crazy could be. And this week, I think maybe moved the bar. But yeah, certainly an extraordinary week.
And you rang the bell.
Rang the bell. Wanted you to be there.
I know. I'm sorry.
You couldn't make it. I brought you this token.
Okay, thank you.
So when you ring the bell, people see you on the podium. But actually, before that, there's a ceremony that happens in this beautiful room in the back. And this is a small version of a larger medallion that they give the bell ringer.
Okay.
And there's not that many people who've rang the bell. On the back,
did you physically ring the bell? Was it you?
I have rang the bell.
Okay.
But I didn't ring the bell this time. Our general counsel and chief compliance officer, who did so much extraordinary work on this undertaking and with the SEC, I asked her to ring the bell. So she stood up there. It's a picture of the original tree that stood in front of the New York Stock Exchange. One of the things that I adore about that place is it's over 230 years old. Think about how many physical locations in Manhattan in the world are over 230 years old and are still at the epicenter of something that matters. It's pretty unique to have that characteristic. And the New York Stock Exchange has it. It feels a little bit like a temple to capitalism and what humans can do when they organize around something that matters to them. So it almost feels like a hallowed ground to me, and a beautiful thing for that space that is so filled with meaning and what humans have accomplished over the last 200 years, to have Bitcoin across the columns, to be celebrating Bitcoin ETFs and this milestone in Bitcoin's journey. So I thought it was so special. And anyways, I wanted to grab one of these and bring it to you.
Very cool. Well, ironically, I'm wearing a Rage Against the Machine shirt under here. And
right on.
They closed down the stock exchange.
Right on, yeah.
You ever seen that video? Do you know about this?
No, I haven't seen it.
Do you know about this?
No, I don't know.
So, I mean, we had a screen, I put it up. So they recorded a video. They took their amps, they took the guitars, drum kit, set up outside the stock exchange. I think it was Balls on Parade they played. I think so. I can't remember. But they ended up closing down. They had to close down the Wall Street.
Oh my gosh.
Yeah, it was insane. It was such a Rage Against the Machine thing to do.
Oh, man. Yeah, I love that.
So, yeah, I mean, look, big week, but really, you've been working on this for some time now.
Forever.
Yeah.
Forever. 6 years.
6 years.
6 years. Long time.
What is there anything you can tell us that we don't know about? Like the whole process in the background? Because obviously you can't talk about it until it's live, but are there things you can now tell us?
Yeah, sure. Well, I will, as a high-level comment, I will say that one of the sort of elements that made the experience crazy is that as an issuer, we're speaking with the SEC all the time.
Yeah.
So we generally know what's going on, but we can't comment on it publicly. And so there's sort of this mind-bending experience of watching the public try to figure out what's going on, and you know what's going on, but you can't tell them.
Yeah.
And then you just get to observe the hit rate. James Seafar and Eric Balchunas, I think generally a very high hit rate. So I've always, I love those guys and think they do a great job of trying to piece things together and help people understand. But that was one of the sort of surreal aspects of it. This ETF launch is unprecedented in so many ways. First of all, just an amazing milestone for Bitcoin. It still feels surreal to me because I think that a Bitcoin ETF, we talk about any dimension that's interesting to you, has been an intuitive thing that should happen to most people for so long, and it just hasn't happened for so long, but it just seemed inevitable, and now it's finally happened. And that is unbelievable, and I think an amazing historic part of this. But there are other dimensions of this that are pretty historic. Is a huge week one open in terms of volume and inflows compared to other ETFs, probably top 1% in terms of ETF launches. And another element that was historic and novel, and I know this is more unique commentary from the ETF side of things than the Bitcoin side of things, but lining up 11 issuers to launch an ETF on exactly the same day is unprecedented. That's never happened before. ETFs have been around since 1993, and that has never happened before.
Wow.
So that was also quite unique. And
are there more still to come?
Bitcoin ETFs?
Yeah.
Maybe. I mean, it's possible. The way that it often goes with ETFs is that there's a bit of a flywheel. So with ETFs, if you have a bunch of similar ETFs, take the gold ETFs, there's maybe 15 of them. As an ETF has higher and higher AUM and more liquidity, it becomes incrementally more valuable than the same ETF that has less AUM and liquidity. The investor just says, the liquidity is good because I can get in and out when I want my money out or I want to put money in. And the AUM is good because I don't have to worry that I'm the only one in this product.
Yeah.
And so usually, even if there are many in a category, there are 2 or 3 or 4 that rise above the rest. And so even though somebody could feasibly construct another one, it wouldn't be as useful to an investor as the ones that have sort of ascended to gain those attributes. So somebody could certainly introduce another one, but I wouldn't expect it to be adopted because at this point, even after 2 days, some of the products have started to have meaningful volume and meaningful AUM that are sort of killer features of an ETF and a flywheel that gets going and keeps going. So,
and I guess the SEC wanted to improve them all together because they didn't want to be accused of maybe picking a winner and facing whatever blowback that would have come with that.
Yes, they don't want to play that role, and I think that they felt that they accidentally played that role with the Bitcoin futures ETFs. At the beginning of October, there were 9 filers for Ethereum futures ETFs, and they lined them all up as well. So this is the second time it's happened, but really at the most extraordinary scale.
Well, your first application was 6 years ago, was it?
You know, my perception of time.
It was a number of years
If
ago.
it was greater than a week ago, it could. We first filed for an ETF in 2018. Is that 6 years ago?
Yeah.
I think so.
Depends
how you count it. Yeah.
I mean, look, I never thought under this administration with Gensler at the head of the SEC, we were going to get one. Never did. And obviously, it changed with Grayscale. Winning that lawsuit was a game changer, and it kind of forced their hand. But at the same time, I still wondered, about when did you actually realize, oh shit, no, this is going to happen?
Yes, so we've been doing this for a long time now. Bitwise has been around for 7 years, and we've worked on many ETFs. We have an ETF that holds Bitcoin miners. The ticker is BITQ. That was a first of a kind product we worked with the SEC on, and we have 15 different products. So we have a lot of things, and we've been working with the SEC for a long time, and we try to be a good partner to them. So we have a fair amount of experience. The key moment where we realized something was different is that in all the prior filings for Bitcoin ETF, and you're gonna have to tell me, Peter, if you're bored to tears because ETF stuff is its own rabbit hole.
No,
so most ETFs are what are called 1940 Act ETFs. It's just a certain structure. And with 1940 Act ETFs, you make one filing, and that filing goes effective 75 days later. And that's maybe 95% of ETFs. There's a small subset, like the gold ETFs and the commodity ETFs, that are what are called 33 Act ETFs. It's just a different apparatus. And with these ETFs, there are 2 filings, 2 different filings that need to go effective for the ETF to launch. And one is called the 19B4, and the other is an S1. The 19B4 is the thing that has really been the focal point for most people watching the Bitcoin ETF progress because it has a time clock on it. It has a 240-day time clock. And when you file a 19B4, there are 240 days for the SEC to approve or disapprove that filing. And then along the way, there are these windows, 45 days, 90 days, 60 days. And that's where you get all the headlines about they've delayed or they've extended the window. And that's not always as meaningful as it sounds, because it just means that they're taking more time to consider things when usually they want to take more time to consider things. So that's what everyone was watching, is the 19B4s. And that has to get approved for a Bitcoin ETF to launch. Your question was, when did you know that something was different? And the reason I'm setting up that context is because this other filing, the S1, historically with Bitcoin ETF filings, they had not really given any feedback on the S1s. They just sort of like let them sit there. And that's because I think there was a general, the SEC is very busy. These are nice people who are trying to do their jobs. They want to do the right thing. They want to do well. They want to go home and have dinner with their families. And they got a lot of priorities. These are not, they don't work in the Bitcoin industry. They have to cover a lot of ground, and Bitcoin is just one of those things. So the 19B4 had received all of the focus. And the bit that flipped was when we got comments on the S1 for the first time in years. You know, we've had prior filings, rejections, never comments on the S1. When we got comments on the S1, we said, whoa.
Okay.
They've decided to invest their precious time in this other necessary element for a launch that they've really not invested time in before. Something is different. That's not a coincidence or a random phenomenon. That's they want to make sure that they're organized around this. So that happened maybe in Q3 at some point. And that really caused, I think, a lot of the issuers to say, oh man.
Is it unnecessarily bureaucratic, or are you of the side of, or the opinion that no, these processes are necessary, these checks are necessary, these, you know, because you have to have all your disclosures as well. Like, is all this necessary?
I think there are many ways to invest in Bitcoin.
Yeah.
You can self-custody Bitcoin, which is, you know, a fantastic solution for some. There are all the apps and brokerages. The ETF has a role to play, and the role that it's supposed to play is to be this very tightly wound, regulated, lots of rules and procedures. And that's what makes it, in part, different from other solutions, and that's its incremental benefit, is you can have a lot of peace of mind that there's going to be no shenanigans, no creative thinking, you know, or bad decisions by the issuer, because there's a rule set that is described in a public filing and evaluated by a regulator. So I think that's part of what makes these things valuable and makes it such a breakthrough, is there are a lot of investors who wanted those attributes before investing in Bitcoin. I'm not saying that is the only way somebody should invest in Bitcoin or the best way. I'm just saying that there are a lot of people who were interested in investing in Bitcoin and said, we want to wait to do it until there's an apparatus like an ETF around it that has those protections that provide peace of mind. And so a process is necessary for that. In general, I think that it's helpful. You think about all of the brain damage that we took in 2022 from these, I'm not going to pick the word.
Scammers. I can say it.
I think that is a valid submission. This is a protection against that.
Yeah.
And that's important because people want to bet on Bitcoin, and sometimes the company or the app, they don't have an opinion. They don't want that to be the risk. They don't want the apparatus around the Bitcoin to be the risk. Bitcoin is the thing that they're there for. But most people are busy. They don't have time to evaluate corporate risk management policies. That's all a distraction and BS. And so I think that the peace of mind that comes with the diligence that goes into an ETF is really important. So I think that it's an important process. And 240 days is fine. I think the reason that people have had low patience with it is because it's been 10 years.
10 years, yeah.
Yeah, but I don't think that 240 days is a crazy amount of time to spend evaluating every corner and every risk. And I think that's what the ETF is supposed to be. It's supposed to be the one where that's all looked at with discipline and disclosed and considered. So,
well, what was quite interesting is I actually just thought this is a product for the boomers, like product for people who haven't got time for Bitcoin or institution, whoever. And what's really interesting is we've already had a couple of listeners email in and say that because it's their IRAs, they're flipping their IRAs. Yes. And what I noticed, because of the Vanguard thing, was the amount of people who've now also flipped their IRAs into a, I don't know, it's like Fidelity or something.
Sure, yeah.
Because
there's a
it's
lot
an
of
easy
providers.
process,
Schwab has-
and they're showing these screen grabs of it. And so what I didn't realize, actually, this is a product for Bitcoiners who have got pensions as well.
Absolutely.
It's not just
Yeah, I think
holders.
you pay for things sometimes with cash, sometimes with a credit card, sometimes with a wire or ACH, maybe an app. The same person can decide to use different methods in different contexts. And I think even for a Bitcoiner who really prizes self-sovereignty, which I think is part of why we're all here, they can say in a certain context, like my retirement account, which I want to have a tax-advantaged self-directed IRA. That is useful to me. And I want Bitcoin to be in there because I think that Bitcoin has an amazing journey ahead of it and I want to be part of my retirement investment. But in that context, it needs to be something like an ETF. And so I think somebody can have self-custody Bitcoin and can have an ETF in an IRA. Excuse me, we serve RAs and IRAs. So I think, by the way, that the Bitcoin ETFs are an amazing gift to the IRA investor.
Yeah.
So on Monday, if you wanted to have Bitcoin in your tax-advantaged retirement account, you had to invest in a fund that charged 2%. Think about that. 2%, it's a retirement account. Imagine 10 years of 2%.
Yeah.
That adds up. By Thursday, so BITB, the Bitwise Bitcoin ETF, launched as the lowest cost Bitcoin ETF in the world. And by Tuesday, at 20 basis points. So by Tuesday, the amount that a Bitcoin investor had to give away to fees in their IRA to be able to have Bitcoin in their IRA dropped 90%.
amazing.
Multiply 20 basis points by 10 years versus 2% by 10 years, and that is a gift to investors. And in an IRA, they can trade out of the expensive one into the efficiently priced one without a tax event.
Nice.
So it's just a straight gift. That means they can own more Bitcoin or they can keep the cash, but it's a huge. So to your point, I think that an ETF can play a role for a lot of people depending on the context. I think IRAs is a huge one. In the US, there's over $10 trillion in IRAs because there is a lot of value to people in having that tax advantage account.
I also like this thing that James Seifert was telling us the other day about a portfolio balancing. He said that this is going to, it will increase the liquidity of Bitcoin, but it also dampen the volatility in that if people have to have like, I don't know, say 5% it was Bitcoin. If Bitcoin goes up, they have to rebalance every quarter. If it goes down, they have to keep rebalancing. And that's going to dampen the volatility, which actually I think is a good thing. I mean, I think the problem with the volatility, it scares a lot of people off. If we can dampen that, I think that's great. But so I've had mixed views on ETFs. Danny similar, and we've debated it. But over time, I am becoming a little bit more pro. Because I accept that they're not going away. So if you're going to have them, look to the positives. And the fact that people can have these in their IRAs and protect themselves in the long term, I think it's a good thing. Have you changed at all?
No, I think the idea of having an ETF in an IRA makes tons of sense. I mean, I wouldn't tell anyone to buy it because you're essentially paying a fee to have an IOU. So I think if you're a Bitcoiner, there's no reason to buy it unless it's in an IRA. But for that vehicle, I think it's good. Yeah, I think it's great.
I'd love to know a bit about the mechanics. This is one of the things I haven't fully understood.
Yeah.
So if I go on and I buy 20 of your shares, 100 of your shares, you don't have to buy that Bitcoin immediately, right?
Oh man, I would love to talk about this if you're ready to under.
Yeah,
you're up for these details.
Can I ask one question before we get into this? Because it's kind of going back to what you said earlier. You mentioned there'll be like 2 or 3 winners. From the first few days of trading, do you have a good idea who that'll be?
Can
I tell you? Can I name who I think they are?
Sure.
I think it's going to be BlackRock, Fidelity, you guys, and there was one other.
Grayscale just have so much Bitcoin.
Grayscale. I think it's those 4.
Yeah. So after the first day of trading, I believe BITB, the Bitwise Bitcoin ETF, traded something like 126 million, and BlackRock was up there, was higher, Fidelity was higher, and GBTC very high.
That's not your own seeding, right?
No, that's just investors trading the fund. And BITB, the Bitwise Bitcoin ETF, ended the day as the largest by AUM. So by the end of the day, was at 240 million in AUM. That will continue to evolve. I also want to know, maybe we can talk about this at some point.
Hasn't that changed though? Like, didn't we not have the full BlackRock numbers?
I actually don't know.
Yeah, I think something just came out.
That seems very possible because they get published. There's sort of a sliding timescale in which they get published. I think so. I don't want to. I don't want to.
Sorry, I'm taking away your glory there.
No, problem at all.
But you're up there.
Exactly. I think and I hope that BITB is a viable option. And one of the liquid and large options coming out of this week, and I think that that's the case. The other thing that maybe we could get to at some point, I want to answer your question, but also we made a decision to donate 10% of the profits to nonprofit open source Bitcoin development organizations, and that's because we care about this space.
That's very
and
cool.
my hope is that if BITB and the Bitwise Bitcoin ETF gets large, that is a good thing for the ecosystem. So we could talk a bit more about that, but it's not just a good thing for Bitwise. With these ETFs, if it gets really large, great. That's great for the issuer. They have extra revenue, but it should be good for the ecosystem as well. Was our thinking behind doing that?
So who was that? Was that OpenSats and HRF you're giving it to?
There's three, wasn't
There's
it?
3. So it's 10% of gross profits for at least 10 years. So it's an ongoing source of funding, which I think is really helpful, as opposed to always wondering where the next dollar is going to come from for them. It's Brinks, OpenSats, and Human Rights Foundation.
Brink as well.
So Mike, Matt Odell, Alex Gladstein, who are all, at least from my vantage point, do incredible work to make sure that there are resources for developers to contribute to Bitcoin Core and ancillary projects so that the ecosystem continues to move forward. And to some extent, the rest of us get to ride along on the coattails of that work. I didn't do any programming this week.
We did loads.
Yeah, I saw. I walked in and you guys were working on things.
Yeah, pull request.
And that is ultimately good for Bitcoin investors, for shareholders of the ETF. They're taking exposure in Bitcoin. They want Bitcoin to be successful. For Bitcoin to be successful, there are these unsung heroes, developers who are contributing to the open source work. But those developers need resources. And who's going to solve that? And I think if Bitcoin ETFs can become very large, Bitcoin ETFs should step up and help solve that. So our CTO, Hong Kim, who's a developer and friends with many of the developers in the ecosystem, had this thought. And I just thought it was when you think about it for a minute, it makes so much sense that this should be the case. So we were really excited to introduce that program and support those organizations. And again, very excited that if BITB becomes large, it will contribute more support to the Bitcoin ecosystem.
So people have talked about quite a bit about the inflows, and I think for some people there was a bit of disappointment. But from our understanding, it's like this is going to take some time to scale up. You do have the announcements, you do have the ability to trade on day one, but this isn't a day one thing, right? I think you even tweeted about this.
Yes, yeah. So that's exactly right. So with the ETF, there are some people who have the time to move quickly, but there are a lot of people. So Bitwise today manages over $1 billion. We've protected investors throughout things like 2022. We only focus on this space, so every waking hour, and it keeps us pretty busy. There's a lot of things happening. And we serve over 3,000 wealth management firms, teams across the country, institutional investors, family offices. The reality is that these people have a lot of other fish to fry and other priorities that are important. There might be something happening in a family. There might be a project they're working on with their equities portfolio or their bond portfolio, or they're working on taxes, and they can't drop everything. Some of them happen to have an opportunity where there's a moment in time and they can, move quickly. And we certainly had clients who allocated just in the last 2 days, which was exciting to see. But for a lot of them, they say, this is amazing. We're so excited. This is hugely enabling for us. We will make time in the next week, 2 weeks, 3 weeks. But that's the time scale. It's not the next hour, 2 hours, 3 hours. They have meetings. They have a lot of responsibilities. And if they put Bitcoin into a portfolio at 1% to 5%, that means they've got 95 to 99% of other stuff that they need to be attentive to as well. So I think that absolutely, relative to ETF standards, it was a huge opening for relative to ETFs. But I think most of the story will be written over the course of the next weeks, months, and year as people have the time to engage with it. And it's not some genius insight. It's just a very pragmatic challenge, which is that people are time constrained. But we will follow through. I think one of the things I'm proud of with the Bitwise team is that we haven't gotten distracted by anything.
Mm-hmm.
The ups, the downs, 7 years, some really soul-crushing moments. We don't say, you know what, why don't we talk to investors about growth stocks? Why don't we talk to investors about private credit? We still go in and talk to investors about Bitcoin and investing in the space. And I sometimes feel like we're like, if you think back to school, we're like the teaching assistant of Bitcoin, I feel like. We walk in and we say, what are you thinking? What's on your mind? What are you working through? How can we be helpful? And we do that come rain, come shine. Last year, we had 20,000 meetings and calls with investment professionals across the country. So we'll do that. We're not going to get distracted by AI or start pitching gold or start pitching short duration bonds next month. And I think that's a reason that a lot of investment professionals end up picking Bitwise, even though there are, of course, these giant firms. And I respect all of these firms. They're pros, but they have a lot of responsibilities themselves. If they're managing $200 million of equity on behalf of an investor, they can't just not talk to them about that and say, hey, I don't want to talk to you about the stocks that make up most of your portfolio that we manage for you. Instead, I want to talk to you about Bitcoin. They have to deliver on those responsibilities. And if Bitcoin is 1% to 5% of the picture, that means they've got, again, 95 to 99% of other responsibilities they have to follow through on. Whereas Bitwise has both the challenge and the luxury of being able to have one topic that we will show up and support you on, that we are focused on in all cases. So I think the story will be written over the coming weeks and months, but you can be sure that Bitwise will be following through on that story.
It kind of echoes what we've been talking about with our podcast.
Yeah.
Yeah, we have the same conversation. Like, should we be doing other things? And it's like, no, Bitcoin. Always comes back to Bitcoin.
Yeah.
Okay, but that said, I mean, look, if our trajectory seems to be towards that, most portfolios will be constructed with some allocation now towards Bitcoin, which is easily achieved through these ETFs. That is a huge new bar in the market.
Huge, yeah.
A huge new bar in the market over the coming years, at a time when we're also heading into a halving.
Right.
Yeah. So that's really interesting.
The setup is really compelling. Our CIO made a Bitcoin price prediction at the beginning of the year that Bitcoin would end at 80,000 or over, we don't like to say numbers that are crazy. So that I think
that's a conservative number.
Conveys the level of optimism in the setup. To your point, the halving, also from a macro perspective, potential rate cuts.
Everything is lined up.
Yeah, the opening aperture with an ETF, and even just zooming out of all of that, we think that the space has 4-year cycles, and there's a theme of every cycle. I think that the theme of this cycle is the mainstream is showing up. It's not going to be just that you have to interact with a startup, or you're going to be able to go to some of the same firms that you use for everything else and also do Bitcoin things there. Maybe it'll be through Lightning. Maybe it'll be an ETF that you can now buy through Schwab instead of having to download an app. I think that there will be firms that incorporate Bitcoin into. I'm speaking with a large corporate that is thinking about putting Bitcoin into their treasury.
Love it.
And that's not a Bitcoin company. That's just a regular company. So I think the halving. I think that the amazing capability and benefits that the ETF represents. I think the macro backdrop, and I think also just the maturation. People are watching the space. They're familiar with it. They watched 2022 and they said, "Oh my gosh, is it over?" It wasn't over. They recognize that durability. They recognize that suggests that there's something of substance here. It's a drumbeat. It's not a watershed. It's not like when shorts get liquidated in one day and just everything flips and the price leaps up, and it's a drumbeat. But I think the setup is is very exciting. And I'm excited about that because investors can benefit so much. I think the world is sort of an uncertain place for an investor today. Should you be investing in Apple at 3 trillion? Is that the move? Should you be buying Nvidia at 1 trillion? Should you be buying US treasuries? Should you be shorting US treasuries? Should you be in corporate bonds? I think there's a low grade uneasiness amongst many investors that what got you here may not get you there. That the 60-40 or whatever your bread and butter was, something may be shifting. It could be the debt load in the US. It could be the geopolitical tension. They're not sure. It could be AI and the way in which that introduces deflationary productivity. But there's just sort of a general uneasiness. And now, at this exact moment, Bitcoin, which has a low correlation and has its own trajectory and potential, is available to you. So I feel incredibly optimistic, and I think it's going to be a real benefit to investors that they can now participate.
Yeah, it feels like a maturing of Bitcoin as well. And I know we're still rebels and Metallica shirt wearing rock and roll people, but there's like a maturing. I don't know if you know my background's advertising. I worked in the ad industry for 20 years, and the quality of the advertising in the last 6 to 12 months it's really leveled up. I thought the Coinbase ad was particularly brilliant. And then obviously all the ads that yourself and Eck and such have been running since, they've made Bitcoin look like a mature, credible product to people who probably have heard quite derogatory things about Bitcoin in the press, that whatever the Wall Street Journal, New York Times are writing about it. That's happening also at a time whereby there's a lot of blowback now against people who are misreporting against Bitcoin. We've seen it even this week. We've seen Elizabeth Warren get community noted. We've seen New Scientists get community noted. So I just feel like there's a maturing of the product, and we've kind of breaking through this wall of FUD that we've all had to. I mean, you know what it's like. We've had to suffer so much FUD. We're like breaking through that now.
Yeah, totally. I will also say that the success case, the end zone, is not the whole world being like, this is the most beautiful thing, since the Big Bang. Think about anything that of high quality. People disagree about whether Apple is a good stock to buy. Microsoft was sued about an M&A transaction. The banks have been fined. Success is not every investor on the planet thinks that something is a good investment, nor that there's not multiple perspectives that are valid. So I think the success for Bitcoin is not going to be that every person in the world is like, I should buy this tomorrow, and there's no risks and no challenges. It's just that success, in my opinion, is that everyone has access. Everyone has a coherent understanding of what it is.
That's the one.
And the emotion starts to get removed. I think that historically there's been a bit of emotional resistance where it's not that they don't think it's legitimate for, we're concerned about the inflation curve, or we're concerned about block rewards versus transaction fees. Those are conversations that can be had. It's more like, we would never touch it. And you're like, why? We would just never touch something like that. And I think as that gets removed from the conversation, it starts to be, you know what? We just don't invest in assets like this. We don't invest in gold. We don't invest in real estate. We don't invest in things like Bitcoin. That is what success looks like from my perspective.
Yeah.
It doesn't have to be that the whole world does the exact same thing, because there's almost no investment like that.
Yeah, the coherent understanding, for me, is, I understand access, but the coherent understanding that people get what this is. And for me, it's, I want to start at the simplest place. I want people to understand 21 million, and I want them to understand decentralization, and I want them to understand censorship resistance. But if I get 21 million personally to begin with, people all understand that Bitcoin is not some, weird currency for criminals, as people like to class it. People want to say, it is a scarce asset, and scarce assets are important because of X.
Right.
If people just get that to me, that is a huge leap.
Yeah. Our chief investment officer sometimes likes to say that sometimes investing is complex and sometimes it's simple. And with Bitcoin, it can actually be very simple, which is that there's a limited amount of supply and there's an increasing amount of demand.
It's a game. Get as many sats as you can. Okay, can we talk about the mechanics? Because I don't.
Sure, yeah.
This is one I haven't fully understood, and the reason I really want to understand it is that my original assumption was like, okay, someone buys a share, you have to immediately buy the corresponding amount of Bitcoin. But now I understand you have a certain amount of time to settle, maybe a day or two. And so if the price radically changes, how do you ensure you get the right amount of Bitcoin and avoid slippage? Also knowing that, essentially knowing, if you're charging 20 basis points, you've only got a small wiggle room to get that just right.
Yeah. I'll attempt a description here. Yeah. And again, if I see your eyes glaze over, then I will cut rope and we can move on. But I'll give you the answer to this question. So the way an ETF operates is shares can be created. So you create a share, somebody gives you cash for that share, and you buy Bitcoin and you put it in a custodian. And that's the simple core. You create shares. You want shares from us. You give us the cash, we'll give you shares, we take the cash, we buy Bitcoin and put it in the custodian. That's the base. The only people who are allowed to create and redeem shares in the case of an ETF are authorized participants. Sometimes they're referred to as APs. Most people are not allowed to create or redeem shares, just this small subset. We have
people like JP Morgan.
Yes, yeah, they're an AP on some of them. Jane Street, Virtu, Macquarie, there's a few others. So
I'm being facetious because of
of course, right, yeah. Those firms are in the business of running this function, which is being an authorized participant for ETFs, and they are the only ones who are allowed to interact with the ETF itself and create shares or redeem shares. So when an investor opens a brokerage app or account and they place an order to buy shares, they could either be buying from some other seller. If Danny wants to sell his shares and you want to buy at the same time, you might just be buying from Danny through the exchange. Sometimes, if there are more buyers than sellers, the AP will step in and will sell you shares instead of some other market participant in the secondary market. They will then, so they'll sell you their shares, they'll take the cash from that transaction, and they'll come to the trust and they'll create shares. So that's the basic model, which is a little bit of complexity. It's the base. The trust creates and redeems shares, buys the Bitcoin. The AP is the only one who's allowed to do it directly with the trust. And then people can trade amongst themselves in the secondary market. And if there are ever more buyers or more sellers than the other, the AP will step in and will fill the other side of the trade and they'll net it out with the trust. What does that mean for thinking about volume versus AUM? It means that they're not one for one. So if, let's just say that Peter, you buy $1 million of BITB in the morning, and in the afternoon you sell $1 million. That'll be $2 million of volume, and it'll be zero net demand.
Yeah.
So that'll show up as a big volume number and will not show up as an inflow. So that's a reason, a basic mental model for why volume can be one thing and inflows and AUM can be another thing. There's a second.
Sorry, just to interrupt. So volume's important because of liquidity and AUM's important because of inflow.
Yeah, AUM usually suggests volume. It suggests that there are a lot of other clients who've trusted this fund. It's a vote of confidence. It also often gives the issuer scale to negotiate better fee arrangements and you get the benefits of economies of scale, which then get passed through to investors in many ways. So that's why it matters.
How much is in a ticker?
Is in
the ticker name? Because some people obviously had a bit of fun with it.
Yeah. So ticker names really do signal a lot about the intention of the issuer. For most financial professionals and institutional investors, they don't want to get fired. So their job is to protect the money. To make the best investment and protect the money. So you want to be thoughtful about the ticker will show up on the statement that they're held responsible for. And if something is down 15% and it looks like you were messing around, that potentially makes their life difficult. So on the flip side, you want to have a memorable ticker if you can. So that's the trade-off always. It's so I loved seeing all the tickers come out, and they all just represent different trade-offs and thinking about things. If you can be a memorable ticker, there's 27 of these things. So if you can be memorable, that's really valuable. And that can outweigh, potentially the downside. But we decided to go with something that we thought was evocative of Bitcoin and Bitwise. But we actually Well, I'll save that story actually. But
Off-camera story. That sounds like that sounds like an off-camera story.
Yeah, maybe an off-camera story. Yeah.
Somebody said to me a long time ago, when you've got financial advisors,
Sure.
yeah, a lot of them don't need to take the risk of recommending Bitcoin. Historically, it was too risky. They would be managing someone's portfolio, and to throw something like Bitcoin in just presents a risk that they don't need to take. Has the market now shifted with ETF in that really most people need to start thinking about it? And could it come to the point whereby if you've not recommended it and Bitcoin has a great year, people are going to turn around and go, well, why didn't you recommend me that?
I think that is now on the table.
Yeah.
So we do a survey of financial advisors in the US every year. We've done it for the last 6 years. And we got our most recent survey maybe 2 weeks ago. And I think something like 19% of advisors said that they had some exposure to the space. And 88% said they were waiting until there was an ETF.
Wow.
They're ultimately in the business of, an individual works hard to save, works hard to build wealth so they can retire, so they can send a kid to school, so they can build a house, so they can take care of their parents, whatever it is. And then they hire the advisor to help them with that money accomplish their goals. And so the advisor takes this really seriously and they don't want to mess it up. They want to help. And so things that can give them that peace of mind and that comfort that their client is going to be safe and do well are very important to them. And so an ETF, I think for many of them, they saw 2022 and they said, oh my gosh, how, there's an interesting opportunity here, but how are we going to make sure that our clients are safe? And an ETF is a very familiar wrapper. And it comes with those elements of peace of mind. So I think to your question, we're entering a new chapter. And a door is now opening where I think that previously maybe it felt like a novel, maybe slightly risky thing to do. And I think it will start to feel more like a sensible thing to do. And people will ask, why are you not doing it versus asking, would you do it? And people come to different conclusions on that, but that will widen the aperture. When the gold ETF launched, so the dollar came off the gold standard, the end of the Bretton Woods system in 71 or something like that. The first gold ETF, and it traded, by the way, in the 70s, gold was up 126% one year. It was down 60% one year. I mean, the thing was volatile. People disagreed whether gold had any value. And that disagreement expressed itself in the prices as they came up and down and the market voted. But when the first gold ETF was introduced in 2003, which is many years later, that was not the end of gold's journey. That was, in many ways, the beginning of gold's journey for investors, or the beginning at least of a new chapter, because it allowed it to be considered in many contexts where otherwise it wasn't possible for people to consider. It allowed it to be considered in an IRA. It allowed it to be considered for a financial advisor, for an institution, a pension. And I think similarly, for all of us who are sort of ancients in this space, it feels like this is maybe the end, the completion of a journey. The reality is it is the beginning of a journey, and the journey will not be over in 48 hours. The journey now, I think, will be a boon and a tailwind and a new participant in the space for years. In the same way that people, I think a lot of people in the space look at leverage in the system. They know that is a constituent part of what's going on in markets. And they look at on-chain flows and money moving in and out of the exchanges. And they look at people who've held for a certain, 2 years or what have you. They piece together a picture of who are the players and what are they doing. I think that the Bitcoin ETFs are a new constituent that is going to represent a lot of patient, thoughtful, long-term oriented investors. And that is a reason why we also felt, again, without even knowing how the ETFs would open, we said, we're going to donate 10% of the profits because we think that this is going to be one of the enduring stakeholders at the table. And it's important that you set that up the right way for the ecosystem, because I think that they'll be an important, constituent. Yeah, I think that the conversation is going to shift.
Amazing.
Yeah. And again, in the backdrop, if we put ourselves in the shoes of most investors who don't spend as much time as we do thinking about the space, the setup is really conducive to saying, you know what, it's now feasible because of the ETF. And it just so happens that a lot of the things I'm chewing on in terms of should be mine, equities, bonds, credit, real estate, a lot of that current thinking is really conducive to, there's a certain amount of open-mindedness right now to how do I best set myself up for the future. And I think Bitcoin is sort of a very relevant asset. And at the exact same moment, they have a breakthrough in their ability to confidently access it.
Do you have to help educate the advisors?
A ton.
Yeah.
Yeah. Oh my gosh. Yes.
How do you do that? Did you create a platform? Do you send them documentation? Do you do trainings? How do you do that?
Yeah, we everything. I told you we did 20,000 calls and meetings.
Yeah.
So a huge part of it is recognizing advisors. So we'll talk about advisors. We serve advisors. We serve, of course, people who own it in their IRA, their institutional investors, family offices. But just to talk about advisors for a second, I adore advisors. Let me describe an advisor. An advisor is somebody who is trying to help. Let me back up. For most people, the three most important things in their life are their family, their health, and their money. Mm-hmm. If something happens to one of those three things, they could care less about what's on Netflix, or what's going on with the 49ers. Those are the three most important things. The person that they hire to help them with the money is the advisor. That's their doctor. So it's an amazing part. In the past, I had worked at Facebook and I had worked at Instagram. And these are hugely successful software platforms that have pervaded across the globe, 4 billion users or something like that. But something that I always felt was it is ultimately not the highest sort of order of magnitude in terms of the importance in a person's life. Mm-hmm. It is important. It's a way to communicate, stay in touch. But money, health, family, those are the main things. An advisor gets to be part of the most important part of people's lives and is there to help, which is really amazing. The other thing about an advisor is that they are in most cases, a small business or a startup themselves. So take a team managing $150 million on behalf of their clients, or even managing $10 billion. There might be 6 people on that team, and they're working with 100 families. So they're strapped for time, and they're trying to do right by the client, but they need to be looking at the growth stocks. They need to be looking at the client's taxes, again, the bonds, the real estate. They got to cover a lot of bases for a lot of clients. And the client calls them and says, hey, I'm getting a divorce. Can you help me figure this out? They need to help them figure that out. Or the client calls and says, hey, there was an accident. We need to buy a new car. They have to cover whatever's happening in their clients' lives while also monitoring every asset class in the world and every product development of those asset classes. That's why I say, you got to give some time here and recognize. So then we show up. They got 99 other things going on. We show up and say, we really think that it could be to your benefit and your client's benefit to consider Bitcoin as having a role in what they're trying to accomplish. And they go, I'm interested. I just don't have much time. And I feel like I could be missing things. And I'm constantly surprised. And I talk to 6 different people and they tell me 6 different things. And we say, well, we can help. Where are you at? And what are you working on? So we try to really sort of, like the teaching assistant, meet them where they are, as opposed to jamming them with, you're an idiot and you're going to be, that's just not, they're just people like the 3 of us around the table. They're trying to be successful, so we do that. In terms of more concretely, we write a weekly memo to clients. We do a quarterly report with 40 charts and data points. We have 2 pages on, we call it our Bitcoin library. There's 2 pages on everything from what is Bitcoin mining? Is it only used for illicit activities? All the sort of questions that come up along the journey. Is it a finite supply? What are its correlations? So that's available when the time comes for them to look at it. We have software tools that allow them to simulate what it would do to portfolio returns. We have a software tool that allows them to compare correlations. We will do custom analysis for them. It's probably more than you ever wanted to do.
Yeah.
But
it's a lot though.
There's a huge, for many of our clients, the relationship with Bitwise and knowing that suddenly you get a team of a ton of people who only spend time on this, who are there whenever you need us to support you in whatever way you need, is as valuable to many of our clients as any feature of the product. The product is essential, but the journey that they go on and knowing that they have a specialist partner with a long track record is really helpful to them as well.
So it must be buzzing at Bitwise right now.
Oh yeah, yeah. It's an amazing. I think I tweeted out a few times this week. I'm fired up. I'm even more fired up. It's just it's the best. It's really fun. And these products again are just it's so exciting to be able to say to clients, we have something incredible for you.
Yeah.
20 basis points. KPMG does the audit. We have our portfolio manager, senior portfolio manager, spent 20 years at BlackRock. She managed $250 billion. She's been managing our funds. One of the most experienced crypto portfolio managers. She can trade the Bitcoin for you, right? Because she trades it for the fund. We've set up all these OTC trading counterparties. So we will access the most cost-efficient Bitcoin liquidity instead of you wondering if you're getting the best price. All of the peace of mind that comes with the ETF wrapper. So there's just so many benefits now that can make these people's lives easier. So it's really exciting to get to talk to them about it. And people recognize the moment. So there's a lot of conversations that have already happened, have been set up, and I'm fired up.
Amazing.
One of the things I'm thinking about a lot right now is I'm reading Lynn's book, Broken Money. We had a gathering at the end of the year and gave out copies of the book.
She was here yesterday.
Is that right?
Yeah.
She's so brilliant. This book is... when I was in college, I was the teaching assistant for the history of business in America. And I love how she has combined sort of a longitudinal perspective on the evolution of money and monetary systems. And I had to give a talk at the New York Stock Exchange when we rang the bell. And I was thinking about what to talk about. And I decided to share a story from my grandmother. My grandmother passed away, but was 97 when she passed away. She was born in the 1920, a little after the 1920s. Anyways, in her lifetime, she lived through basically the popularization of the car, the invention of the airplane, the invention of the radio, the invention of the refrigerator, the invention of the dishwasher, the early days of electric light. She lived through the television, the air conditioner, of course, the internet, the personal computer, the Apple Watch, the iPhone, and towards the end of her life, she got to see Bitcoin, and we would talk about it. That was possible in one person's lifetime. One person, that much stuff changed. No airplanes, airplanes. No air conditioner, air conditioner. No TV, TV. Now TV on a phone. Now in your pocket, wherever you are. All in one person's lifetime. Something I love and is captivating me. I don't get to talk about it very often, but I think Lynn's book lays out part of what I think is so exciting about working in this space, which is the world is going to change. We are not at the end of what humans can do. 2023 is not the perfect and final evolution of every system and institution and creation of humans. It's going to change. It changed that much in one lifetime. It's going to change over the rest of our lifetimes. It's going to change over the rest of and I think what her book lays out and almost makes intuitive for the reader is, oh my gosh, the monetary system has not been, it's not like since the pyramids. It hasn't been the same for 2,000 years. In fact, it hasn't even been the same for 200 years. In fact, it's only been the way it is for like 50 years. That is not very long.
Yeah.
And so things change, and the current thing has only been around for 50 years and currently has a lot of stress. And I think it's incredibly exciting and meaningful that people in the Bitcoin space and for us get to be part of proposing a solution. I think that there's a lot of people who are just like, I don't know. It doesn't seem good, but I'm tied up. I'm busy, and so I think that's a very exciting.
Yeah, we all get to live at the front of this.
Yes,
it is kind of insane. Well, listen, Hunter, I'm glad we got to do this. Appreciate everything you've done, and congratulations on the launch.
Thank you.
Very successful, and I wish you the best. Where do you want to send people? Remind them the ticker BITB.
That's right. And website is bitwiseinvestments.com. I'm H Horsley on Twitter. But
we'll share it on the show notes, and I'll probably see you in San Francisco in a couple of months.
Oh, I love that.
All right, man. Listen, congratulations, and good luck for the rest of this year.
Thank you. Thank you very much.